getting into our kind of some of the qualitative analysis that we do, that's less systematic, but just something we do on a regular basis. Certainly do. I look at this chart every day, and let's call it 5 o'clock in the morning. Bitcoin is leading both net liquidity and the SPY lower. So what I'm showing here in the blue line is our measure of net liquidity at 42 macro, which is comprised of the Fed's balance sheet, Treasury general account balance, and the reverse repo facility balance. And as we can see, those latter two being inverse, they drain net liquidity when they rise. What we're seeing here is very clearly net liquidity, which has been driving markets since the global financial crisis, has very clearly been driving markets throughout the pandemic era. And as you can see from our base case scenario, which assumes some dynamics around reverse repo facility balance. We don't have to go into that. We'll talk about that in the macro scouting report on Tuesday. But anyway, based on our assumptions around the reverse repo facility balance, we can kind of get you to, let's call it 4,300 on the S&P at the top end, which assumes sort of a $906 billion negative delta in the reverse repo facility balance on top of the $380 billion of quantitative tightening we're likely to get. So at the high end of our bull case scenario for the next, let's call it 4 or 5 months, we're saying 4,300 on the S&P. Base case scenario, we were right around there, getting close, 3,900-ish on the S&P. And then the bear case scenario, which assumes an actual continued rise in the reverse repo facility balance of around 250 billion on top of the 380 billion of quantitative tightening we're likely to get. That's how you get to a S&P 500. That's call it 3350 in terms of in terms of in terms of our medium term outlook. So Bitcoin was calling this out. Bitcoin sniffed it out early. It said this was not sustainable, and guess what? It wasn't sustainable because Mr. Powell came out and said exactly what we thought he was going to say in terms of phase three equaling tighter for longer. I think we did a good job of positioning for that ahead of time.